We'll get continue. A very warm welcome to everybody. Good afternoon. Today's event, we're lucky to have two speakers. Actually, when we advertised it, we only had one confirmed, but we've actually got two. And our broad theme is about sustainable finance, but particularly because it's the Environment and Sustainability Institute, we're focusing on the ways in which finance connects with the sustainability agenda around the environment in particular. And for those of you who don't know, and perhaps are new to the ESI, the Environment and Sustainability Institute, we have research going on in three areas, which we call the 3 E's: ecosystems, energy, and engagement. And all of those things actually depend on questions of finance. And it's interesting, in the last year or so, it seems as though biodiversity and environmental sustainability, natural capital, is really rising up the agenda in the city and the financial world and the business institutions. So it's very timely for us to have this event today to just start having a conversation about some of those more financial, business-oriented issues as they connect to the questions that are central to the ESI. So today we've got Chendi Zhang, who's going to say a few words about the University of Exeter's new Centre for Sustainable Business, based on the Streatham campus, but very dynamic and keen to collaborate. So it's great to have Chendi with us today to tell us what they're doing. He'll just make a brief overview, but I hope once you've met him, you'll be able to follow up with him and we'll carry on collaborating. And then our main event today is to hear from the CEO of Southwest Mutual, Tony Greenham. So hi, Tony. Very pleased to have you with us. And he will tell you that Southwest Mutual are trying to set up a new regional bank. And for areas like the southwest of England, where we, and in Cornwall in particular, perhaps, we have a very particular economy that always tends to get overlooked because it's SME driven. We're a rural, dispersed population. We're a long way away from the centres of business and decision-making often. And we're just the kind of area that needs a regional bank that's about banking for local people, that's much more embedded and engaged in what's going on in our region. So it's a fantastic project that he's going to tell you about today. And I hope, again, there'll be lots of chances for us to collaborate going forward. So Tony's talk will be about half an hour, and then we'll have lots of time for questions and comments and discussion. So save your comments and questions for after his talk. So without further ado, I'll pass over to Chendi, who'll tell you about the new Centre for Sustainable Business.
Great, thanks Jane for the introduction. My pleasure to be here to join the community to talk to colleagues in Cornwall and with Tony as well. Let me just try to share my screen here. Okay, great. Well, as Jane said, we are establishing a new center at business school in University of Exeter. So our focus is on the topic of sustainable finance. I'm the director of the center. But what is sustainable finance? In our view, we think of it as an integration of ESG factors. So these are environmental, social, and governance factors into finance, into financial decision making, but with the aim to create value for all, for the society. So here's a key difference with, I guess, traditional finance, where we just think about shareholder value maximization. But here, what we try to I guess, encourage our students and fellow researchers in the academic community to think is, well, firm's objective is probably going beyond just shareholder value or share prices maximization. Okay, and as Jane also mentioned, this is a growing industry. So when I started the research, doing research on this area probably 15, 20 years ago, was a very niche area in finance. Small number of investors in Europe and the US are doing some sustainable or socially responsible investing, basically integrating some of these non-financial objectives into their decisions in finance. But nowadays, it's a huge market. Based on some industry estimates, there are $30 trillion out there that are managed based on some ESG or sustainable responsible factors in the investment decisions. Okay, so this is about 20% of all the assets around the world under professional management. Okay, so what are we going to do as the Exeter Sustainable Finance Center? We try to do rigorous research, provide large-scale rigorous evidence on the field of sustainable finance. But it's not only research. We also try to bring together students and other faculty, alumni, and other industry partners to the debate and share ideas on the innovation around sustainable finance. Well, in terms of research, we look at currently 3 main areas. The first one is ESG investing, environmental social governance investing. And second is stakeholder governance, so looking at the impact of other stakeholders of the firm. And then finally on climate finance and climate risk. So there are 3 key questions we are currently working on at the center, hopefully address these issues and then inform our stakeholders about these issues, right? So how sustainability affects the risk and returns for investors. That's probably the first order issue in finance. Investors want to understand how it affects their profile, the risk profile of their investment by taking these factors into account. And then the second question is looking at which factors under which conditions are most important for business, right? And then the third question is we look at the overall impact. So how finance contribute to this global debate problems such as climate change and inequality, right? Especially look at the financing and investment to these solutions, right? To helping, I guess, to give a solution to these problems, right? So we offer both undergraduate and postgraduate modules on sustainable and responsible finance. We think it's really an important thing to do because if you look at business schools in top universities, it's still very much focused on this idea of, the social responsibility of a business is to maximize profits, right? So as if shareholder is the main, is only, I guess, main stakeholder behind business. I'm sure Tony will talk a lot about that. And then about the center, we currently have 14 faculty, including 5 professors, 2 associate professors, and 3 lecturers and 4 senior lecturers. If you want to know more about the center, please get in touch with me. And we have a website. Here it is. That's about it. Yeah, I guess if you have questions, I'm happy to answer at the end of the session. Great. Yes, over to you, Tony.
Yeah, over to Tony, who's going to share his slides too, I think.
Yes, well, thanks very much, Jane and Chendi, and thanks for having me here. I'll pop the slides up and just briefly give you a little bit of background. This is a slightly unusual talk for me because most of the time I'm obviously sort of giving more of a pitch for the bank to investors and other stakeholders. But I also have a background in policy research and lecture in money and banking as well. So given that this is a university audience, the first half I've thrown in a bit of conceptual stuff and theoretical stuff, which I thought you might find interesting, leading to why we think we need to set up a regional mutual bank. So I'll talk about that at the end. So, and just to declare an interest, I suppose, in Chendi's work particularly, I also do sit on the advisory committee of a leading ESG fund management firm in the city called Lion Trust. So very much a believer in ESG strategies because their funds, guess what, they outperform mainstream indices over the long term. So it definitely works. We want to apply that to banking. So what I'm looking to cover today are these 4 things. Just something about banking on a just transition and what's the challenge for banking. Secondly, and this is more of the conceptual bit, why banking is particularly important in the financial system, and that's around its role in credit creation or the power to create money. Then why regional stakeholder banks, and I'll explain what we mean by that, are important. And then finally, I'll introduce a little bit more about South West Mutual. So the challenge. Well, very recently, the UK Climate Change Committee published a report on the role of finance in achieving our goal to get to net zero. And I think it's really interesting to frame this conversation because they suggest the additional investment every year they think will be needed. It will have to ramp up from 10 billion a year in the UK to nearer 50 billion a year investment. A significant amount of that is into retrofitting residential buildings. And another big chunk is to do with electrifying energy systems. So a massive amount of investment needed in greening the economy. You know, the question then arises, is our current financial and banking system fit for this purpose? Now, frankly, I don't think it is. I mean, it's certainly getting better, but we think we've got a long way to go. So that's the scale of the challenge. This chart shows us what UK banks actually allocate lending to. And it runs from 1997 up until 2019. And what I'd like to draw your attention to is the bottom two slices are for personal consumption and non-financial business, what we might call the real economy. And you'll see that over that period, that hasn't really gone anywhere. The huge growth in bank lending has been lending to other financial institutions and commercial real estate, which has grown, although it's relatively small relative to the others, it's grown amongst the fastest, and then residential mortgages. So there's a persistent problem that the banking system isn't lending to the things we need it to be lending to in sufficient quantities, even to sort of fuel productive investment, let alone towards greening the economy. And just to make that point, I've listed there the scale of bank finance going from the largest banks in the UK into fossil fuels over a 3-year period, which are enormous sums into what should be a sunset industry. So that's how far off they are. And here's an interesting little thought experiment. So the amount of SMEs deposits in the region that we serve, which is the Great Southwest region, and I'll go on to explain a bit more about what that is, but small and medium-sized businesses actually deposit 6 billion odd into the mainstream banking system, but they only get 3.3 billion of loans out. So the huge irony is that Southwest smaller businesses are putting money into a banking system that is using it for financial speculation and fossil fuel investment. And we don't think that's what they would like to happen. On that SME point, I've skipped a slide, sorry. So here's another part of the challenge. Now, when we talk about transition, a just transition, it's not just that we need to get to a net zero carbon economy, it's just that the way we get there has to be fair and seen to be fair. I mean, this is a growing consensus, and hence this phrase of banking on a just transition. Social justice is important. So we need to also tackle issues of financial exclusion. And in the region, there are still substantial numbers of people who don't just lack access to a bank account, but they may be dependent on cash. A lot of people who are not actually users of the internet. So it's all very well saying, well, banking's gone digital, use an app. For an awful lot of people, that is just not suitable. A little bit more on the SME finance problem. I mean, it's been a persistent trend that large high street banks and global banks have sort of withdrawn increasingly from lending to smaller businesses. And there are a number of, I won't go into them, but there are a number of particular sort of gaps and niches and sorts of niches. One of them, interestingly, is that a lot of businesses have lost so much trust in the banking system that they'd rather sacrifice growth and productivity than invest in their business, if investing in their business means they have to get a bank loan. So these are problems which we want to address. And the sort of final piece here, I suppose, is that the UK is there's more and more awareness now. There's political imperative of levelling up. I was around during a previous government that talked about rebalancing the economy. So, you know, lots of talk, not much action over the years, but definitely people recognise that it's not a good thing that the UK has such an unequal distribution of wealth within it. And of course, Cornwall is right down near the bottom of that chart, but so are the other counties in the southwest. Now, why is banking important in particular in the financial system? And I want to make a case that it plays a special role and therefore deserves special scrutiny. And that's all about the idea of, well, not the idea, I mean, it's now become an accepted sort of description of what banks do, which is that they create money. Now, for those who haven't sort of come across this concept, that might seem outlandish, but let me try and unpack it a bit. The starting point is actually to ask the question, what is money? To which most of us grow up with an idea of money as an object, a commodity, gold. And, you know, you see this in films, in popular fiction. So that picture there is from Harry Potter. You might recognize the Gringotts Bank, full of treasure, but also Treasure Island. You know, a lot of literature equates money with gold and commodities and objects. Now, gold, of course, has been used as money, but that's not really the essence of what money is. Money, I will argue, is actually a social relationship. It's not a thing, it's a relationship. Now, what do I mean by that? Well, we have to start by unpacking where this erroneous idea of money came from. So here I'm going to be very brave and say that Adam Smith, the founding father of economics, was wrong about something, but luckily I'm not the only person to have said this. So the Wealth of Nations, the sort of founding text of economics, talks about barter when Smith talks about the butcher, the baker, and the brewer. So he imagines that, well, how the specialization of each of them specializing in their own thing is a good thing. That creates wealth. Well, that's true. Nothing wrong with that insight. But where he gets it wrong is imagining how they then trade with each other to swap their goods. And I've given the quote here. I won't read it all out. But the crucial bit is that he sort of imagines that to get over this, people must have just settled upon using a commodity such as gold as a means of exchange to allow them to, rather than having to swap, you know, a piece of meat for a barrel of beer. The problem with this story is, as anthropologists and historians and various other people have pointed out, is that it's just not true. Now, I'm afraid, I'm an economist, so therefore I reserve the right to take a pop at economics. But you know, I'm afraid economists can be rather guilty of making stuff up if they don't know the answer. So these are all quotes from economics textbooks, which I think are quite amusing because you'll see each of them uses the word imagine. So in trying to explain the origins of money as coming out of the inconvenience of having to barter goods directly, they all use these quotes about, well, imagine how hard that would have been. You know, imagine you have roosters, but you want roses. Oh, I don't know, that's a terrible thing to happen. But in actual fact, the idea that there was ever a place where you would attempt to go and swap roosters for roses is just not true. There's no evidence that any society fundamentally organized most of its economic activity through barter. Barter may have taken place, of course, but that wasn't really the true origins and nature of money. And David Graeber expresses this best in his book on debt, which I'll cite later, which is quite simply that nowhere's been able to locate a place where the ordinary mode of economic transaction was, I'll give you 20 chickens for that cow. Now I'll come to why all this matters. But first then, so what is money then? If money isn't a commodity and gold that was arrived at as a way of getting around this inconvenience of having to barter, what is it? Well, here are some explanations. Niall Ferguson, who's a historian, sums it up very nicely. Money is not metal, it is trust inscribed. And just to make the point, I've got a little excerpt there from a Bank of England £10 note. And in very small print, it says, I promise to pay the bearer on demand the sum of £10. And of course, if you were to arrive at the Bank of England with that £10 note and say, oh, it says on here that if I'm the bearer of this note, I demand the sum of £10, they will just give you another banknote. I mean, there is no, the point is that the money is actually the promise to pay. And the Bank of England itself says that now. So I've quoted their own explanation. That modern banknotes have a value, which clearly is way in excess of their paper value. And they have a value because everybody trusts that they can be accepted in exchange for goods and services. So really, you know, it turns out that money is really just an IOU. In the case of the Bank of England, that IOU is backed by the full coercive force of the state, actually, because you have to pay your taxes using sterling. You can't pay them in roosters or cows. So it really enforces the acceptability of the money by ensuring that you have to pay your taxes in it. But what's interesting is that, you know, an IOU can of course be written by ordinary people. And it amused me when I saw in a collection box at a museum, somebody had sort of, instead of putting some actual banknotes in, had put in a little note saying IOU £50, and then decided that was too generous and crossed out £50 and written £5. But I presume that they genuinely meant to come back later and put a £5 note in. So the reason for me wanting to say all of this, I'm sort of, for those unfamiliar with economics or monetary economics, I'm delving into some perhaps quite tricky concepts here. But in essence, I'm saying that money is something which has a strong public interest. It's not a private matter. You know, money is acceptable because it is something that is reinforced by the state. It's a social construct. It's a political construct, and therefore, I would argue that money is really a mutual concept. In order to enable mutual exchange, money is a mutually acceptable medium of exchange. So I'm not going to try to go through the full, there is a whole lecture to be done on how banks create money, but I will just, for those, if this sounds unconvincing, this is again a quote directly from the Bank of England that simply makes the point that given that bank deposits are themselves merely a promise to pay from the bank, they are an IOU, that these IOUs can be created by the bank whenever they make a loan, and that is exactly what they do. So 97% of the money supply in the UK consists not of banknotes created by the Bank of England, which is only 3%, but of IOUs or bank deposits created by commercial banks. So this is an enormous power that is effectively privatized. What this means is that the quantity of money that's created in the UK, and more importantly, what it is allocated for in the form of loans, is up to the decisions made by private for-profit banking institutions. So if you want to sort of dig deeper into any of that, I can, apologies for the terrible self-promotion on this slide, but university professors would never normally do that, I know. So you could read Where Does Money Come From, which I co-authored. David Graeber is an amazing text. Modern Monetary Theory, go to Stephanie Kelton, and there is a TEDx talk that I did on this subject as well, if you fancy that. Now, so if I'm saying that, first of all, we've got this huge challenge in the banking system to finance the just transition to net zero, and I'm arguing that the way that banks create money and what they create it for isn't up to scratch right now, what can we do about it? Well, you could think of there being three broad strategies for changing the banking system. Culture change, there's a little photo from the Southwest Mutual team away there, or better regulation, which I'm not going to talk about, but obviously that's a fair strategy. And there are changes in regulation that are making banks pay more attention to their climate risks, for example, which is all good. But I want to talk about the final bit, which is, well, you could also make sure that you have the right kind of banking institutions. And actually, Chendi has referred to this earlier on in terms of the dominant form of institution having been the shareholder-owned for-profit company. And actually, would a more diverse landscape of institutions serve us better? Well, I'm going to argue that it would in banking for sure. So here's the case for what we call regional stakeholder banks. Now, to step this up, I'm going to play you two adverts. They're about a minute each. The first one is from Barclays Bank from 2000. I used to work for Barclays back in the day. And I promise you it's not a spoof. It's a real advert. And the second one I'm going to play is from a New Zealand bank. So sit back and enjoy Anthony Hopkins in Barclays Bank advert, Big.
What is this about? You know, seeing the big picture, having the big idea, clinching the big deal. Nobody wants to clinch the little deal. Who wants to do that? Be a little deal clincher. Small shop. When you go and get a burger, you want a Big Mac. Goes in front there, you ride Big Dipper. You turn on TV and you see Big Bird. Are you afraid of the big bad wolf? When I was growing up, I wanted to be the big man. I never wanted to be the little man. Even the little man wanted to be the big man. You go to America, you want to go to the Big Apple, not the Little Apple. I get up in the morning, I want a big breakfast. I want my girlfriend to say, "Good morning, big boy." To which I reply, "I've got a big day today. Big meeting with big cheese from the big studios. Big time with big bucks." And she would turn to me, rolling her big blue eyes and say, "Big head." I retort, "What's the big deal?" Give her a big kiss. Get my big car, set up some big wide world. She'll give me a big wave, close the door of our big house. Look in the mirror and ask herself, is my bum not big enough? In my big meeting, I turn to one of the big hitters and I say, I love this movie, it's going to be big. There's only one small problem. Wait. I'd like to be, what's the word?
Tony, that was quite hard to hear on my computers, and maybe if you increase the sound at your end. Don't know if anyone else found that difficult.
Ah, sorry about that.
Well, just about catch it, Tony. So it wasn't a waste, but it was difficult. I get the message. It was all big.
Yeah.
Maybe, okay, well, apologies for that. Well, you can send the link round. It's a shame because you will have missed the full cringeworthiness of the script. And I don't know if we've got any sociologists in the room, but you'll have fun unpacking that, the patriarchy and various other embedded memes in that. But let me, I don't think I can increase, well, maybe I can try. Let's move on to see if we can have better luck with the New Zealand bank, which I want to contrast with the brash, bigness of that advert.
What is this about big?
Oh, hold on.
You know,
sorry.
seeing the big picture happen.
There we go.
Results are in, and I'm done.
I'll just check if that's audible. Not good.
Yeah, a bit better, Tony. Yeah.
Okay.
Delighted to report that in the last financial year, the bank has made yet another record profit.
News is another record profit.
To the bank! To the bank! Is it out there?
Introducing the only New Zealand bank to share its profits with its customers.
Crack the good stuff, Dennis.
So obviously there's a sort of bit of silliness in those adverts, but it's sort of subverting the fact that the idea that anybody would celebrate a bank increasing its profits. Of course, well, you would if it was your bank and it was a cooperative and you own the profits. That Barclays advert actually was controversial at the time because at the time they were extolling the virtues of being big. The chief executive had just given himself a massive pay rise and they'd slashed their branch network serving rural areas. So anyway, I'm going to argue that actually in banking, it's not that we don't need big banks, okay? Actually, the real argument here is about diversity of banks. And we certainly do need to have a place for, in our banking system, smaller banks and banks that are mutual. And those are examples of what we call regional stakeholder banks. So what regional stakeholder banks are ones which are mission-led, so they are not solely profit maximizing firms. They have a social mission embedded in their corporate structure, like cooperatives, or in law or in some other way. They're regional, so they serve relatively small areas, geographical areas, which they then become intimately knowledgeable about, which enables them to do better lending. And they often cooperate in networks to gain economies of scale. Now, why does that matter? Well, it matters because there is substantial evidence of these banks that they do better on financial inclusion, which is a problem I mentioned earlier on. They allocate a higher proportion of deposits to SME lending, again, which I've mentioned previously. They overall allocate more of their credit to the real economy, so they do not engage in lending to other financial sector firms and sort of non-productive lending, which again was one of the problems I highlighted earlier. And there's lots of evidence that these sorts of banks tend to reduce the inequalities between regions within countries. So the fifth one is boosting resilience. So I've mentioned the previous four, but I just want to say a word about this idea of economic resilience. So here's evidence from Germany post the financial crisis of how 3 different types of banks performed. The bottom line are Deutsche Bank and the other big global banks, which withdrew credit from small businesses and the real economy. But in Germany, the Sparkassen, the local savings banks, public savings banks, and the local cooperative banks both steadily increased credit to domestic companies and SMEs, which was one of the important factors why the German recession was not as bad as it was in the UK. It wasn't just in Germany, because Switzerland has a very similar banking system and having 3 different types of bank. Same story. Credit Suisse, who I also used to work for back in the day, and UBS withdrew credit from the economy, but the others made sure that they carried on lending. Japan also, similar thing. Here's the picture in the UK. There was a massive withdrawal of credit from the real economy in the UK, but we didn't have the other parts of our banking system able to step into the gap. And this is because the UK is very unusual in being so concentrated. So this shows the proportion of bank assets between different categories: commercial banks, cooperative banks, public savings banks. So although it looks as though the UK is in a bunch of similar countries there, actually we're different even from Canada and Japan and the US, because in our case, that sector of non-commercial banks or cooperative banks are building societies. Nothing wrong with building societies, but they only do residential mortgage lending, or at least 75% needs to be residential mortgage lending. So they don't play that strong economic role in SME lending in regional economies, whereas in all the other countries they do. So we miss out, and it's unusual. And particularly we miss out on having regional level or local banks, which are commonplace and significant in most other countries, well, of any size. Or if you're a very small country, there's not much need to have regional and local banks, but in larger economies there is. Just to ram that point home, here's comparing USA, Germany and France, and the number and the general assets that are within regional banks, whether those are commercial regional banks or stakeholder banks. And although there is a community finance sector in the UK of credit unions and community development finance institutions, when you add them up, they total only about 4 billion of assets, whereas in these other economies, the regional banking sector is 1,000 times or more bigger, or it's a different order of magnitude, well, 3 different orders of magnitude different. Here's some examples. Torbay is twinned with Hamelin in Germany, of Pied Piper fame. They are both roughly the same size, but unlike Torbay, there's a local savings bank that serves purely the region of Hameln-Weserbergen and is one of the mainstays of SME lending and financial inclusion. It has 2 billion of assets, just that one bank serving an area the size of Torbay. Here's another example, Bournemouth, similar size to Lucerne. Lucerne has its own cantonal bank, which is a public savings bank, assets of 25 billion and a market share of business lending over 50%. It does longer term lending than the commercial banks do and has long-term relationship banking with its business clients. Another example from Japan, Okinawa Prefecture has its own cooperative bank. That's about the same size as Devon, you know? So I think you're getting the picture here that, you know, when you look at the Southwest and the UK, it's actually quite unusual we don't have our own banks. Final example, Plymouth. There's quite a few Plymouths for obvious reasons in the US. Here's one of them, Northeastern Savings Bank. And, you know, it's assets of over $1 billion, 18 branches. And just look how happy all those people are on the adverts, which sort of proves the point, I think. And here's their branch network superimposed roughly over the scale of the Southwest. So why is it not that, you know, why don't we have this kind of bank? We should have this kind of bank. And we're not the only people that say so. You know, there's a number of different think tanks, policy institutions, and now indeed politicians who agree. And cooperative banks, I just want to say a word here. Most of the research that goes on into the benefits of regional stakeholder banks happens in Germany and other countries, not in the UK, probably for obvious reasons, because there's nothing to study in the UK. But here's a recent one from the University of Hohenheim that says particularly that small banks significantly help the economic growth prospects of underlying regions, and especially cooperative banks boost economic growth. Kevin Hollenrake and John Glenn, who is the Minister for Banking, have both also said that they find the proposition of regional mutual banks compelling. So what does it look like? So this is the bank we're seeking to establish, Southwest Mutual, covering that area, Cornwall, Devon, Somerset and Dorset, otherwise known as the Great Southwest. The key features are, it is a cooperative. We do have financial inclusion as part of our mission. In terms of businesses, it's not just smaller businesses, but also the growing social enterprise sector, community enterprises, employee-owned enterprises, things with non-standard corporate forms. The large banks have generally not been very good at understanding or serving. So we think that's an important niche that we can do well. We're multi-channel. We will have state-of-the-art digital. As a new entrant, we can take advantage of the latest fintech, but we're also going to have face-to-face customer service, because that remains extremely important for, for discussing products, for dealing with complaints, for building trust, actually, and as a way of delivering customer service. High social environmental standards. So I'll talk more about this, but we are very keen to be an exemplar in how we can embed ESG factors, which Chendi talked about right at the beginning, in our own banking risk frameworks, because we don't perceive this as being done very well. There are banks that are better than others, and Triodos I'll call out as a good example in this case, but they generally will have a sort of wrapper over their core banking risk assessment of sort of ESG factors. We want to have an integrated approach where the way that we make a lending decision absolutely takes the environmental and social factors into account through that process. And in terms of the scale, we're aiming to build a bank of about £500 million balance sheet. So here's the vision. Communities flourishing in harmony with nature. Our purpose is actually to promote inclusive and sustainable prosperity in the southwest of England. So note that our purpose is tied to the region and tied to those aims of inclusive and sustainable prosperity. So our mission, which gets down to things that are now measurable, is to provide banking services that are honest, effective, accessible, and locally rooted. I want to talk about the one part of our model, which is rebuilding trust in banking. So we think that being a mutual, I don't think actually, survey evidence, including our own, tells us that people do trust mutuals more than PLCs, more than shareholder-driven companies, particularly in finance. One of the reasons that they distrust banks is they see senior executives, they think, overpaid at the same time that they're cutting back branch staff or paying them very poorly. So we will not only beat the real living wage in our lowest paid employees, but we're going to have a maximum pay ratio from top to bottom. And the business model is well, I've talked about it before, actually. You know, when we're going to apply, you know that your savings are going to be applied to things that are investing back in the region that aren't about financial trading speculation. It's about the real economy, and it's about sustainable projects that are financed. We will be doing the normal range of products. That's just there for completeness. You know, current accounts are pretty crucial. We will want to introduce those alongside savings and loans, both to businesses and households. How do we do it? Well, I've mentioned this briefly, but it's the combination of digital channels, human contact, either remotely or face-to-face, and making the best use of local outlets like the post office and PayPoint for people that still need convenient access to cash, both to deposit and withdraw. So the economic, social and environmental factors, we've developed an impact framework that has, I haven't put all the indicators here, but which is developing a range of indicators to track our performance across these various goals, which, as I say, are integrated within our business goals. So I'll pick out a couple here, which is that, you know, there are, again, there are studies and evidence that suggests that the additional SME lending we think we'll be able to fulfill safely through our superior closeness and knowledge of the region will lead to increased job creation and preservation. On the social side, if we can do better on financial inclusion, that has multiple benefits from saving people money through higher fees that they're having to pay, but also well-being effects, impacts on education, homelessness, all sorts of problems with problem debt. And on the environmental side, well, that challenge that we saw early on about the huge amount of finance that needs to be available for the transition to a net zero carbon economy, it's true in the Southwest as anywhere else. So we're looking not just to back green industries, if you like, so renewable energy and the like, but it's really important to us to be able to finance the change. So whether that's businesses that are looking for finance in order to make their own business model more sustainable, or if it's home loans for retrofit, the huge amount of retrofitting that's going to need to happen in the Southwest. These are sort of priority products for us that fit into the need for this transition. And so I'll wrap up there with just a sort of summary of why we think we're different. Because we'll be the only bank that combines these three things. We're purpose-led. So yes, we will be profitable. It's a business, but it's one which is led by its purpose first. And the profits are a means to the end of achieving the purpose. Secondly, place. We'll be the only bank that's dedicated to this region and is particularly familiar with the industries and the people within this region, which gives us a superior risk performance as well. There's a business ethic behind that, as well as just wanting to serve a purpose. And then finally, participation, being a customer-owned bank that's directly accountable through its ownership structure. So thanks very much for listening and look forward to some questions.
Great, thanks, Tony. That was a brilliant talk, and I'm sure there'll be loads of questions. I am often struck walking around Cornish towns that you see old buildings, beautiful buildings actually, with Cornish Bank across the top, and they've now got other things going on in them. And we did used to have, of course, a really strong regional banking sector. And when you're talking, it's very exciting to imagine what that would be like, especially for the regeneration of our own region going forward. So very inspiring. If anyone wants to ask a question, please either just put the logo on from the bottom. There's a reactions logo at the bottom, and you can find some hands there to put on, and I can call you. Otherwise, just put your camera on and ask a question, or you can raise it in the chat and I can read it out. And John Taylor's actually already put one in there. So go, John, if you want to ask your question.
Oh, hi there, Tony. Yeah, fantastic presentation. I'm out of region. I live in East Anglia, but I work for the regional energy hubs. So I was going to ask, are you connected with the Southwest Energy Hub? And are you supported by the LEPs in this initiative?
Answer to the first question is not connected with them. It does ring a bell. I'm sure I must have seen information about them, but if you can make a connection, please do. I forgot to say right at the beginning, actually, so I'll say it now. Please do follow us on Twitter, both at Southwest Mutual, at Tony Greenham, and LinkedIn, where you can find the company under Southwest Mutual. So you can always contact us via those channels, or my email address is just tony.greenham@southwestmutual.co.uk. So do get in touch. On the LEPs, yes, the biggest LEP within the region is Heart of Southwest, that covers all of Somerset and Devon. And they are backing us initially with a small investment. We've also talked a number of times to Cornwall LEP and haven't spoken to Dorset LEP, but we are in conversations with both the constituent councils in Dorset. So local authority is a very important stakeholder for us as potential investors, but also as partners, because our mission aligns pretty closely with a lot of their own economic, social and environmental goals.
Alex had his hand up.
Thanks, Jane. Hi, Tony. I'm Alex. I work at the university as well, along with my colleague who's on the call, Jack Oliver. But we're just picking up on your points about ESG reporting. Jack's come from a finance background and has been working with colleagues around climate risk management, climate finance activity. But we're just, as a university, embarking upon the final stage of a large NERC application, which is around nature and people. And we have a strand in that proposed bid and project around kind of biodiversity finance. So this is kind of really starting what I hope is the crest of a new wave, but maybe climate finance has been going on for 20 odd years or so. We've got the new task force for nature-based disclosure that's just kicking off this year. So this kind of concept of biodiversity finance, or using finance to deliver green or biodiversity outcomes, is building up a momentum, and we're really looking for this new NERC call, new NERC project that we're developing in partnership with the National Trust to have a strand around biodiversity finance. So I was just flagging that as an opportunity, and it would be kind of great that if you and South West Mutual might be interested in having a further conversation around that and how you can shape things. Between now and the beginning of June, we're going to be developing the final application. It's over £10 million in value, so and there's a real opportunity to make it deliver what you want. And then more personally, outside of work, I'm a director of a community benefit society in South East Cornwall, and we've raised loans and finance to buy buildings and housing and workspace. Yeah. It's called the Peninsula Trust. I'll put a link in the chat. But we've worked with the Cooperative Society and other kind of banking sectors and Triodos in the past. But it would be great to kind of transition our banking maybe to a bank that's in the region as well.
Great. Well, on the first thing, and Jack, hello, Jack. Jack and I did meet a while ago, actually. So it'd be good to pick up with you both that you've got something cooking. Because I don't know, there wasn't a particular project at the time when Jack and I spoke. So that sounds really interesting. We're one of the sectors I'm particularly interested in myself, but as an institution, given where we are, is agriculture. And the capacity for agroecology as a farming method to achieve multiple wins, one of them being biodiversity. But we've identified that there's a gap in finance for, anything which isn't farming as normal. Farming as normal being spraying chemicals and petrochemicals and everything, basically. I hope there's no farmers on the call think that's a bit rude, but essentially there is a lack of finance for agroecological approaches. So that sounds like a really interesting project.
Well, the farming and the food element is also kind of dear to my interests, and if one conflates, both biodiversity loss in the region and climate change challenges against also our changing common agricultural policy or transition from Brexit, we know that 60% of our farmers in the region won't be solvent without their basic farm payment. So they've got to be doing something different, or they're going to be going bust. So that, I think, as much as that being a sad and a worrying thing, can be also a great opportunity, but also might change the way in which our natural environment looks in the southwest quite drastically as well.
Absolutely. I mean, I think that sector is one of the big sectors, along with home, houses and transport and so on, that needs to change significantly. But and that can feel quite terrifying. But I think you can also, as you've just done, you can frame that as a huge opportunity. And I think in the southwest, the opportunity to transition towards farming, food and farming sector that actually solves a lot of these problems, as well as producing food. Let's not forget food, fiber, and fuel. Then we could end up with a much stronger, better, and cleaner economy. It's not necessarily that these threats are going to drag us down. We have to flip that around, I think. But if you don't have the right finance for that, then that's a blockage.
Yeah, great.
I can't see any hands up or in the chat, but keep thinking. And while you do, I'm going to ask another question, which is, I'm wondering about the launch, Tony, because you're saying 22, 23 you're aiming to launch. What do you need to have in place to be able to launch? And what's the role of institutions like ours and the big universities in terms of investing in the bank? And how does all that happen?
Yeah, that's a good question. So there are a number of other banks, by the way, emerging. It's not just South West Mutual. So we have colleagues in Bristol starting a bank called Avon Mutual, and we're both the furthest ahead. But there's also others in Manchester, Northwest and Northeast. My colleague in Avon Mutual has quite a funny line, which says it's reassuringly difficult to start a bank in the UK. It's a long and arduous process, hence the launch is still some time out. So, but really the biggest challenge we face is raising the capital. So obviously the bank funding has two elements to it. There's the savings or the deposits. And we're pretty confident that we can attract those because we think we'll have a compelling proposition, both for institutions in the region but also particularly individuals. And perhaps as Alex has just demonstrated, but the other bit, the essential bit for launching the bank is our own capital. So we need investors in our shares. We will have shares, they're just non-voting because we're a cooperative, but then they will pay a dividend. And we need at least 20 million. That figure needs to be determined in discussion with regulators, but it's probably nearer 25 million to launch the bank, and we'll need further capital afterwards. So we are in discussions with institutional investors around that. And I think that the best investors for that are local anchor institutions, of which universities are one. Now, I won't, I don't know whether that will feel, ultra vires for a university to invest in a regional bank, but maybe it wouldn't. But certainly that's one way. But I mean, the other role of the university, I think, is conversations such as hopefully what I'll pick up with Alex and Jack about how we can leverage your knowledge in a way that can make us more impactful towards delivering a sustainable economy. So I look forward to talking about that.
It must be extremely difficult to launch a new bank. I can imagine there's few things harder, so well done for that.
Well, the funny thing about that sum of money is that it's both a big sum of money and actually a really small sum of money, by which I mean 20 million pounds will buy you about 1.5 miles of dual carriageway. Now, what do you think you're better off spending 20 million quid on? Because by the way, the dual carriageway won't pay you dividends.
Yeah. Anyone else got John again? Fire away, John.
See, Stefano has a hand up as well.
Yeah, let other people go first.
Stefano, sorry, I missed your hand.
Oh, that's totally fine. It's a quite quick question. I was wondering, the video that you shared was playing with the idea of big and small, I suppose. It was a bit disturbing for a few other things, but if I may, anyway. So I'm thinking, aren't you also trapped in that big small obsession as well? And what I mean by that is that now that you are trying to revitalize this regional place-based banking, shouldn't you also maybe experiment different community engagement? It seems to me that it's just a matter of dimension, but you are mimicking the same relations and trust building mechanism of a big bank. Shouldn't you be trying to be a bit more social innovative, if I may, or think differently, having a purely startup mentality, perhaps, being much more networked, much more microcredit oriented. You didn't mention microcredit, that we have 30 years of very good example of microcredit around the world. Why can't this happen in the West? West meaning West cultures, West economies. Just a curiosity. It's not a criticism. It's just really some thoughts that you stimulated through your brilliant presentation.
Yeah. Well, I think that we are. I would say that we are approaching, or certainly seek to approach, the way we engage with our own members and with communities quite differently from large banks. But on the point about microcredit and products, this is quite an interesting point. I think that microcredit is effectively, it's not really a term that's used so much, I noticed in the UK, in the way it has been in India or in Brazil and places, right? So, but in effect, those smaller loans that are unsecured in hundreds of pounds or so on, this is what credit unions do. Now, we are going to be very different in scale to a credit union in the UK, 100 times bigger, but still 1,000 times smaller than Barclays. And I think the point is that we need a variety of different scales within the economy. So whereas we'll be able to do a span of lending that does do some of the larger medium-sized businesses down to smaller loans for both individuals and businesses. It's quite a specialist thing to do short-term high-cost credit loans, sort of the 2 or 3 week loans for £100. We won't be able to do that. And there are various reasons. One, commerciality, but also regulation. So we have to meet exactly the same regulatory standards as Barclays Bank. All right, that's a tough call. And that's because we are seeking the gold standard, which is a banking license. Now, there are other forms of credit institution which are less heavily regulated, that may be more suitable to do other things. So I think diversity, the big small thing, when Schumacher wrote his book, Small is Beautiful, that wasn't the original title. And if you're not familiar with that, please all go and buy it and read it immediately. It doesn't grow old. 1973, I think it was written. But he actually was making the point about appropriate scale. So for some things we need big size, for other things we need small size. But you know, but Small is Beautiful was a better title, is more catchy. so in a way, although I've borrowed that, the reason for saying Small is Beautiful is as a counterweight to this cult of the big, which you rightly say, we're still sort of the mentality. We find it quite hard to get away from the idea that bigger is always better. So it might not be as brash as that Barclays advert in 2000, but that is still the mentality. And actually, for many, many things, smaller is better. But the thing we need most of all is diversity and the right scale of institution to do certain jobs within the economy.
Diversity is a very good note to end on today, because of course it's a very ecological term, and ecologists will tell you that the healthy ecosystem is a very diverse ecosystem, and banking in many ways has become less diverse and less healthy, and we need to get it back. But once we lose institutions, it is really hard to get them back, and that's part of the lesson of banking as well. And Europe's kept its regional banking, whereas we've lost it. So I really hope we can work together on this agenda. It is critically important. Great you've linked up with Alex and colleagues in IIB, but also if you're looking for people to buy shares in the bank at various points or invest, maybe we can use the university networks to support that and likewise link you up to research. So it's been a really great session. Hope it's generated lots of useful ideas and relationships. Thank you all very much for coming, especially Tony and Chendi, and have a lovely afternoon. So thanks all. We need to end now. I'm sorry to Russ, who's got his hand up there.
Okay. No worries, that's okay.
Sorry about that, but we're 1 minute to ending, so apologies.
Pop me an email afterwards, yeah, or tweet us.
I will do. It was just a very quick one, because I was going to do a Challenger Bank about 3 years ago. So I understand the challenges that you're facing. And it was just to give you a bit of an insight of how we managed to secure some funding. So I'll pop you an email, Tony.
Right, we'll definitely have a chat.
All right. Thanks all very much.
That's wonderful. Thank you.
See you soon. Okay.
Bye-bye.
Bye.
Thank you. Bye.
Bye. Thanks, Tony.